Hi, welcome back to the channel. Now, in this month's February 2026 stock market outlook, I'm going to walk through another really high level broader market overview of the US stock market. I'll spend, as usual, around 5-10 minutes just walking through all of the broader US market indexes, and as usual I've got around 20 of my best stock charts for your watch lists going into February, and hopefully the Scottish accent isn't too difficult on your ears. Now, it's taken a bunch of time to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. If you follow me very closely on X, as always, I hope my charts over the last month have helped you to navigate the last few weeks, and hopefully my work over Christmas helped you a bunch as well. I've just popped up the performance data of those selections and the stocks that I was advocating a more of a risk management approach up on your screen. Now, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted those disclosures on the charts. I think most of you know by now that I do not use any magical hindsight indicators. I timestamp absolutely everything, which is hugely important for the field in which I work. I'm one of the very few who go on the record with their work. Now, before I get into this, for those of you that are new to the channel, I'm neither a perma bull or a perma bear. I just analyse the charts and the data as it comes in, and I draw logical conclusions using my own charts. Now, I've got a lot of really great charts prepped for you today. I think if you are a trader, an investor, a money manager, financial advisor, you'll probably find a lot of value over the next 30 minutes. But please do pause the video. Very important disclaimer before we kick on, and don't forget to smash the like button, share, subscribe, share with your social media followers. It really does help with the YouTube algorithm and really does help to get my work a bit more noticed. But one thing I want to just say before we get into this, we're in the middle of earnings season, as I'm sure everybody has noticed. A little rule that I like to implement, and I like to just throw it out there every few months on the channel for those of you that keep getting cut up by earnings reports and keep gambling and losing. One of the rules that I help our clients with is to implement a minimum of 10% profit in a position in order to hold through earnings. It really does help to protect against the holy shit, it's collapsed overnight nightmare that I think most of us are trying to avoid. So hopefully that's a little rule that will help you moving forward if you are someone who indeed keeps getting cut up by earnings reports. But as always, I just want to start off with just showing the performance data of the broader US market, a couple of select overseas markets as well. Massive performance there from micro caps and small caps. Very encouraging for me to see the riskiest areas of the market catch a bid over the last month. The mid caps also performing very well. The S&P in the Qs down, I think largely in part by the underperformance of most of the mega cap tech big hitters. I'm looking at the likes of Microsoft, Apple, etc. that just had really poor months. Whereas under the surface there was a lot of constructive behaviour, a lot of bullish developments as well. But it's not just the US markets, we're seeing the same thing around the world. If you go and have a look at the performance of some of the Latin American countries, South Korea, my word, it's something 20-30% already this month. But continued underperformance from cryptocurrencies. I'm sure we've all noticed the big moves in precious metals and silver, etc. So I do wonder if there will be a rotation into cryptocurrencies sometime soon. But that's something, if you want to keep updated with my work, I'll probably put something out on Twitter at some point, so feel free to follow me there. Equal weight performance data, again, a huge performance there from energy this month. A lot of the setups that I'm kind of observing, as someone who does scroll mindlessly through 5,000 charts every weekend. I have noticed this week a big shift in technical setups in the likes of energy, materials and industrials. I know for those that are fixated maybe more on technology and growth tech, might want to kind of consider branching out a little bit into the other areas of the market, but you all manage your own portfolios. Strong ETF performance again this month. If you picked up the analysis last month, you'll know that uranium and Cameco Corp specifically was a big winner, big pick out last month. So I am noticing a lot more cyclical moves. Semiconductors, very pleasing to see it kick off. It's up 12% already so far this year. So despite the relative underperformance from the S&P 500 and the triple Qs, I think most folks are generally quite happy with the constructive behaviour of the market over the last month. But let's just get into these charts. I think one of the things that I like to do is to not overcomplicate things too much. At the start of every month, I like to just kind of present the longer term outlook. The S&P 500 is going out at new fresh closing all-time highs. Now, let me be clear, the US market is underperforming pretty much every other market in the world so far in 2026. It's not been a great place if you're just strictly looking at the index level. Like I said, South Korea, Colombia, Peru, Poland, those areas are far outperforming the S&P 500. But that doesn't mean that underperformance is going to continue. At some point, the S&P 500 will pick up a little bit of steam, and hopefully the fresh closing all-time highs will be a catalyst going into February. On the shorter term time frame, I'm sure it's very noticeable that over the last month it has been very choppy at the index level. So very patience-oriented waiting game, I think, at the moment. Just as soon as we take out that 700 level, I would expect the S&P 500 to kick on. We do have big tech earnings next week, so hopefully again that can be some kind of catalyst. The NYSE composite again is consolidating nicely. Still working with big upside targets here up around 24,000. The Russell 3000, again, very similar chart to the S&P 500, just patiently waiting there for a breakout to new all-time highs. And it's really the same message with the triple Qs as well, stuck in this 4-month sideways range. It's been a very frustrating area of the market. I think, certainly some of my professional clients are always messaging, emailing, asking me about, can they buy the dips in the likes of Microsoft, Apple, etc. For me, it's more of a waiting game at the moment in those types of areas of the market. I do feel there are better opportunities elsewhere. The Dow Jones, I think as long as we're above this 480 level, then I think you can continue to look for a long opportunity. I think the biggest question I get asked is, Sam, it's all great, you've been bullish for most of the last 12 months, but when do you start to kind of pivot and get a little bit bearish? I think one of the biggest things I can impart as a professional analyst is one of the biggest warning signals that you'll get from an index is a failed breakout at the index level. That's generally one of the tools that I like to use. Obviously, I get into breadth data and, the yen and, there's a whole bunch of charts that can be very useful for getting defensive ahead of big events. But for me at the moment, I'm not overcomplicating it. As long as the Dow is above these 480 levels, then I don't have any issues. The Russell 2000, again, it's pushing those all-time high levels. It's just had a really solid month now. It stands to reason at some point we will get the inevitable pullback in the small caps, in the micro caps. What that looks like, we'll need to see. But for the time being, I'm just treating each chart on its individual merits, not overthinking the indexes too much at this stage. The micro caps just recently hit our first upside target there, so it's very, very logical here this week that we've had a little bit of digestion of gains. That doesn't mean bearish, it just means a little bit of sideways consolidation would be very, very normal, very, very healthy for the longer term structural trend of the market. A little bit of a spike in the VIX over the last couple of weeks, but again, for me, not overcomplicating it too much. I think this is a great chart for those of you, again, that are maybe looking for tradable market bottoms. As soon as you get a massive spike in the VIX, it's oftentimes a great capitulation signal. For me, we're still in the buy stock zone. As soon as we get into the 20s, that's generally where you want to stand back and observe a little bit. As soon as you get into the 30s, then hell no, and of course above 50, that's kind of where you're looking to kind of buy the capitulation. But very, very useful chart for those of you that don't have any kind of process for the VIX at the moment. Now, precious metals have had an absolute monster of a last 12 months. January, if you picked up last month's analysis, gold and silver were pickouts. Now, what I will say, the market has just slammed shut on January, recording this Friday evening here in Scotland. The gold markets have kind of collapsed a little bit. I think the gold ended up down 10%. Silver is down around 30%. Now, we met our upside targets in silver, but the individual ETF chart, I think, shows it better here. This is from our ETF chart book, and it always amazes me just how useful Fibonacci levels can be. For me, some of you watching this will be, it's random. I get it. Fibonacci doesn't work on every single chart. But if you can demonstrate that it's been useful in the past, then it's reasonable to expect it in the future. And silver hit 109 and then absolutely sold off almost immediately. And today, I think silver was down around 32-33%. So silver has met all of our upside targets. The message that I'm going to have to my clients this weekend is along the lines of, if the dip gets bought up, there's not going to be any kind of technical signal from it. It's literally just going to be market buying it and it going back up. There's not any technical setup. For me, the targets have been met. It's thanks very much, Mr. Silver, move on, and then wait for some kind of technical signal. For those of you that are in the camp that see this going much, much higher, great. But for me, time being, it's target met and move on. Now, I did say the start I had around 20 individual stocks for your watch list. So if you're still here, tells me that you're getting a ton of value from the charts. So please smash the like button. Let me know in the comments what you think comes next for the market in February, what stocks are on your radar. If you have any tickers that you want to take a look at, I can maybe add to the analysis next month. So again, feel free to engage with the comments if you like. Now, where I just want to kind of start off, I'm going to get into a few tech names. There's not any order to the charts. There's great charts all the way through the analysis. There's tech, there's industrials, there's energy. It's all kind of scattered all over the place, but we're going to start off with IRN Limited, and we are reporting earnings next week. Now, there are whispers of deals potentially with Amazon that I'm seeing dotted about X at the moment. Whether or not that's got any kind of truth to it, I've obviously no idea, but it is something to bear in mind. It was one of our bottom calls here at $40. It's been travelling very, very well. High conviction idea from $50, and a bit of a stall today. I think it was down around 10% on the day, but it's one of those stocks that's up and down 10% routinely. So I think if it's a name that you like, then being comfortable with that kind of volatility is an absolute must. So all eyes on earnings for us next week. We've got Taiwan Semiconductors. Again, I think it's held up pretty well over the last couple of weeks. Nice breakout to new all-time highs, consolidating nicely, and for me, if it can get a breakout, I would say above that kind of 350 level, then that does bring in logical Fibonacci levels, targets to aim for there as well. Nvidia, again, for us, it's more of a buy low, sell high type of chart. If you follow the channel, I've covered this for the last couple of months, so I felt like it would be a good idea to just keep it in, since a lot of you follow along with my charts. So again, there's not any change to the chart. It's big support level on the longer term monthly outlook, and the target that we're working with there is still up around $215. Now, big breakouts in energy over the last month, as I'm sure many of you watching will have observed. I did post this chart to X and StockTwits a few weeks ago, just saying that Exxon was breaking out of a big 4-year sideways consolidation. Again, this is a longer term view that I'm looking at here. With these types of areas of the market, I often find the longer term monthly charts are better, but I do prefer to work probably more on the weekly chart and drill it down to daily charts for entries. But for presentation purposes, I think this is the best chart to present for Exxon, and it's breaking out to new all-time highs. We've got Compass Inc., which again, big breakout over the last couple of months, and it's just consolidating nicely. I think there is the potential there for a bullish flag breakout if it can get above that $14 level. Novo Nordisk, now again, I've covered this one on the channel for the last couple of months. I had a few folks reach out to me. Again, I'm very happy with the chart. It's just recently met our first upside target. It's probably more of a patience waiting game for it to take out the next level here. I think if there's a close above $63, $64, then that's potentially a catalyst to then take the next leg higher. This is kind of how I like to work these types of charts, especially for our clients that are more into kind of swing trading, buying breakouts, looking for logical target levels. I do try to keep my charts as clean as possible to show the key levels. So I think with Novo Nordisk, I think the chart there makes a lot of sense. GigaCloud Technologies, again, consolidating for the last couple of months under previous highs. I think if there's a close there above $45, then there is a potential there for some kind of momentum to come in. Some of you might have noticed here in the top right hand corner, I do like to use some fundamental data. I do have an overlay of fundamentals to my work. There is a decent little short interest there on GigaCloud at 6%. So if there is a breakout, there is some possibility there for a little bit of a move. Estee Lauder, again, confirmed the breakout last month. Very happy with how the chart is looking at the moment. More of a longer term outlook type of chart, I think, but the targets that we're working with there are up around 155. Target is very interesting going into the next couple of weeks for me as well. Again, another recent bottom call. I covered this one on the channel last month, and for me it looks like it's just kind of basing very normally. I think if there's a breakout there above 110, then potentially that could take the next leg higher as well. Now, another one there is Bilibili, going into China for this one. That's a long-term 4 years sideways consolidation. And again, broken out above the level $31 here. And hopefully, if we can get some kind of move in emerging markets and China, and Bilibili might well be worth adding to your watch list. I did touch on the energy chart a few minutes ago. I just wanted to kind of present this one as well because it's now going out at new fresh closing monthly all-time highs. That's not bearish. Some of you that pay attention to the geopolitical events, etc., will know that there's whispers of Iran, Cuba, Venezuela, pick your narrative. For me, it's very, very straightforward. The chart's going out at new closing all-time highs. So going into February, I suspect that there might be a few more technical setups to be found in the energy space, not just with energy, also with commodities. I know that it's been mostly precious metals, gold, silver, platinum, palladium. They've all had absolute monsters over the last few months, but I do wonder if we might potentially get some participation from the commodity laggards over the next few months as well. Going into Guardant Health, again, one of our best charts at the moment. I think it's just consolidating nicely, and could potentially catch a breakout there above 115. But just bear in mind what I was saying at the start about earnings, and it's an absolute lottery what we get with earnings. So please do plan ahead if this is a name that you like. Lemonade, for some of you might not have noticed this or even be aware of the stock. The Lemonade announced a 50% rate cut for drivers of fully self-driving Tesla vehicles because it's showing a reduce in accidents. Now, Lemonade are an insurer, so that might be something to consider in case the Tesla crew, the Momentum crowd, get behind it. There is a massive 17.5% short interest on that one as well. Now, I thought Zoom was dead. I didn't realise it was still going strong. For those of us that remember COVID, I thought everyone had done with Zoom, but apparently not. It looks like it's potentially trying to break out of a 3-year cup and handle pattern. It would be more of a swing style trade if it can get back to that kind of 125 level. Now, AMD have earnings next week. Now, we just literally met our upside target. It was more of a swing style idea over the last couple of weeks. Met target, and for us it's now a patience waiting game to see what's going to happen with earnings. Will it break out to new all-time highs, which could potentially trigger another entry into the stock, or is it going to sell off? So for us it is target met for the time being, but very, very optimistic on what comes next for earnings. But as I said, need to wait for earnings. I don't gamble on an earnings outcome. Iridium Communications, again, I think there's potential there that it's basing, and I think if it can hold these breakout levels, it has just recently filled a gap. I think there's a strong risk to reward proposition there as well. Now, I had a few questions on uranium and Cameco Corp since I covered it last month. Congrats to anybody, I think, firstly, that did act on the chart, and maybe some of you already own it and have done very, very well on it. I don't know if uranium will keep going higher. I think the URA chart, the ETF, looks very, very similar to Cameco Corp. For me, again, target is met. The Fibonacci level has been hit. There's been a little bit of a sell-off today at these Fibonacci levels, but it could quite easily break out over the next couple of weeks above these levels. But for us, it's now a waiting game. That target's been met. Let's see what comes next. Google report earnings next week. It's going out at new closing weekly all-time highs. Seems to just be good news after good news. $4 trillion market cap now. Crazy. But our target that we're working with there is up around 369. And just on another note, just going into earnings, I think a lot of folks perhaps get a little bit of euphoria with earnings, especially when a stock's had a massive run up. If you look at something like Google, which has been a stock that we've been bullish on from the exact lows in April, it's met all our upside targets. It's been ridiculous. But oftentimes what you find is when you get massive run-ups and you get positive earnings, a lot of folks wonder why the stock then sells off on the back of positive earnings. It's very, very straightforward. It's just because the market's already baked it in to the move, and obviously then you get the market makers just with their shenanigans. So I don't know what will happen with Google earnings. For it to continue to go parabolic, it's going to have to report something spectacular again, which it could absolutely do. But I would have one eye on risk management up here. But like everybody else, I'm sure we all have exposure to it in some way. I'd love to see it move higher. I think it would help to drive the indexes higher as well, which is something that I also want also. So let's see what happens with earnings, but it is breaking out to new all-time highs. Targa Resources, again, more of a swing style idea. I think up around 215, 220 makes a lot of sense there. Now, Venture Global might not be a name that's on everybody's radar. I think there's a lot of positive things to take from it. You've got decent valuation, you've got obviously strong sales revenue growth, earnings growth. For us, it's broken out, it's doing great. I think if there's a further close above $10, then Venture Global might be a name to consider. Now, I posted this one to X and StockTwits over the last 24 hours. It got a lot of attention. I think just purely, I think that the chart's quite clean, so I think a lot of folks kind of gravitated towards it. I do feel like we're hopefully getting closer to the bottom of a move in a lot of these beaten up crypto names. Now, I understand the other side of it, Ponzi scheme and Michael Saylor, and it's a scam. I get it. For me, I think if strategy does get as low as $100, which I don't think it will get that low, I think it would just be a very clear buy level. But I am now starting to look for signs of a more obvious bottom in the likes of strategy. So let's see what strategy does here. Like I said, I think we are closer to the bottom than we are. So yeah, let's see what happens here. We've got OK, I think, going into oil and gas pipelines. Again, I think one thing I do actively look for are tradable bottoms. I love these kind of base breakouts after big declines. And the longer term chart, again, Mr. Fibonacci, this would be a multi-month outlook, but I do believe that with this there's quite a decent dividend on it from what my clients tell me. And also we've got Tower Semiconductors. Again, it looks pretty constructive. I think it's one of those under the radar kind of semiconductor names. It's only a $15 billion market cap. It's been one of our long-term picks. Again, it's been ridiculous since $52 and potentially could be breaking out above these next Fibonacci levels. But again, bear in mind, we do have earnings to navigate there as well. Now, if you are still here, if you're wondering who it is I am and what it is I do, there is a link in the description. Feel free to jump on to our website at honeystocks.com. All of our transparent timestamp work and trade alerts are all laid out on our website. I only use my own custom charts and my own custom data. I can't emphasize that enough. But we do provide memberships to all of our premium work, which includes all of our premium weekend analysis put out every weekend to our clients with all of our best charts and also our weekend hot list. You'll have access to all of our highest conviction investment ideas, and I will show you what that looks like in just a little second. I also provide a bite-sized midweek halftime analysis every Wednesday as well. As well as that, we also provide access to a wonderful, highly intelligent community of professionals, investors and traders from all across the world. You would have access to all of my chart books, which cover all of the most liquid stocks, ETFs and commodities from across the world. And if you are someone who is new to technical analysis, I also provide access to our complete technical analysis program, which I'm told is very, very good as well. But just to quickly show you what our highest conviction ideas look like. This is the recent idea that I put out for AMD in the last couple of weeks. Again, very, very clear instructions on the chart, breaking out of a base, logical targets. IREN Limited, again, one of the recent alerts as well. Cypher Mining, which was great late part of last year. Palantir last year was ridiculous. Nvidia, but I am very, very unique in what I do. Every single year for the last 7-8 years, I've logged every single high conviction idea that I've ever put out to our clients. I logged the performance of those charts, so feel free to go and check that out, scrutinize it. I think that the message that I would say is make sure that the types of stocks that I'm recommending are the types of stocks that you gravitate towards if you are interested in my work. I'm not recommending any pump and dumps, cryptocurrency coins. It's all high quality stocks with solid fundamentals and of course clean charts. So like I said, feel free to go and scrutinize all of those ideas. But I think just on a more general note, I think my work is generally a good fit for anyone that has a mid-term approach. If you're looking weeks to months out, maybe you're someone who keeps getting shaken out of the market by news. Maybe you keep missing tradable market bottoms and when to get defensive. If you keep getting confused by all the different analyst opinions, maybe you're just too busy with work, business, family, etc. to find the best stock charts and you just want to be part of a community because you're sick of hunting around social media. I think generally my work tends to be a good fit for those folks. But if you are here and you've stuck here to the bitter end, I hope you have a wonderful February. I will be back in your inboxes and on YouTube in the next 4 or 5 weeks. So feel free to subscribe, like, share, and enjoy the rest of your weekend. Thanks for watching.